on the screen. Just take a look at that. Yes, down 5%. Dipan, now we're getting numbers coming in from Apollo Hospitals. Well, valuation-wise, it isn't cheap, but it's never been cheap. It's corrected a goodish bit from the recent top. The numbers appear pretty much in line. How do you approach the space and Apollo Hospitals in particular?
Yeah, good afternoon, Nigel, and thanks for having me on your show. I think Apollo Hospitals, certainly, I think if the stock price corrects further, it may make an interesting buy. Because overall now, I think COVID-related cases are going down. So you should see gradual improvement in non-COVID cases, as well as the other medical procedures which have been put off. And Apollo Hospitals over the last few years has established its own network and the bed capacity. And now expansion plans are coming to an end, and they're just about trying to get higher capacity utilization and better yield from their assets. So going forward also, you may see return on investment improve for Apollo Hospitals. And of course, the most interesting part is their digital ventures, whether it is in distributing medicines or even online consulting. I think one should see how those are scaled up, and that always is something which analysts are interested in the con call, because clearly that's a business which can add significant value going forward. So generally positive on Apollo Hospitals, but overall market trends are negative, so you may get the stock at a slightly cheaper valuation.
Deepan, hi, good afternoon. Zomato, it's almost 50% off, right, from its high price. Of course, that's not the only criteria, but at 88, will you buy it?
That's a tough one, Anuj, because the results are disappointing. Let's just bite the bullet over here. Clearly, the growth is not as per street expectations. And maybe this correction would be an eye-opener for the management to try and have a hard look at their business model and see how they can get to profitability, what are the opportunities that they can explore, which can add value. So at this point of time, it's a stock which is in a flux, and too many uncertainties surrounding its growth prospects. I know we were very positive on Zomato, and we even applied for the IPO and saw the swing upside, but now I think it's back to square one. So for the time being, I think given all the sort of uncertainties and very poor performance, I would just like to have Zomato a pass. Let us see maybe 2-3 quarters more how things shape up.
Surprise, surprise, Auto Pharma at the day's high. Yesterday at the start of the trading session, when we just had the numbers prior to the management commentary, everyone thought that stock is going to get a bit of a hit. Yesterday it did gain, and today it's building on to those gains as well. So pull up the intraday chart. As the markets continue to struggle, we have this one that's outperforming. Dipan, would you buy the argument that valuation-wise it's relatively more attractive, or would you say there are too many other issues, you'd rather give it a pass?
It's a company which we would advise exiting out of. And only thing keeping the stock price up is perhaps the management endeavor to try and spin off its injectable business, get some private equity. Certainly will be a value unlocking opportunity and may take the stock price up, which may provide an exit opportunity. Just because the stock is cheap doesn't mean that one should go into it. Overall, I think the business model has taken a lot of hits, and the way US generic markets is shaping up, it's gone back to what it was to pre-COVID times when there was intense competition and price erosion. And a lot of the brunt of that price erosion is being borne by Aurobindo Pharma. Also, there are uncertainties surrounding its regulatory management of the US FDA. On and off, it keeps getting into an issue with them. So keeping the overall picture in mind, I would like to avoid the Aurobindo Pharma, and rallies such as these are good exit opportunities.
Okay. Let's pull out the chart of Lal Pathlabs, Dr. Lal Pathlabs, and that one, remember it's 52-week high was 42.45, and it's fallen about 33% from there. Just to put things in perspective, it's still about 27% off its lows. So yeah, that's the nice enough chart. 12-month, it's still up about 18%. Let's actually first hear out what Dr. Om Manchanda had to tell us on the numbers, and then I'll toss it to Deepan as well.
There's a bit of a dilution of margins, but this company has demonstrated that it has a huge operating leverage, and we saw that as COVID revenue for this company went up. Our margins are actually in line with what they used to be during pre-COVID times. And this time you are seeing slight softness, mainly because of one-time transaction cost that has come in on account of Suburban acquisition. Otherwise, I think now business is more or less settling down without the COVID numbers, and we probably will go back to trajectory that we used to have pre-COVID times. We will do our best to run the business efficiently to see how we protect our margins. But definitely in the last 1 year, one has seen a rise in competitive intensity. Margins pressure in general in the industry augurs well for next wave of consolidation. And this is the learning that one has seen from even global diagnostics players. And I won't be surprised if next 5 to 10 years you have a wave of consolidation happening. And that is primarily going to put a lot of pressure on unorganized segment. And I do see that there will be some amount of consolidation in times to come. And I think one will have to see as we come out of COVID numbers, what sort of pressure it puts on margins of various companies.
Okay, by the way, the market's just taken a bit of a knock, especially on the bank nifty this time, and that's courtesy SBI, Kotak Mahindra Bank and ICICI Bank. Just look at these stocks. SBI in particular, all of a sudden has moved to low point of the day, and that's led the bank nifty also lower. It is SBI moving to the lowest point of the day. Kotak as well. This morning we were discussing Kotak being at a inflection point, the 50-day and the 200-day moving average almost at same level. So a risk of a death cross there, but that's moved to low point of the day. But Dipan, I wanted your thoughts on Dr. Lal. You would have heard the management perhaps in the morning. Again, a stock which became very expensive about 3 months back, but has now seen a decent correction. What would you do here?
Well, no, it's still very expensive at these levels, also considering what its underlying growth rates will be. And I didn't like this statement about the increasing of competitive intensity, because one would have thought in post-COVID world, a lot of consolidation would have taken place and competition from the unorganized sector would have reduced, but maybe that doesn't seem to be the case. It's just that it's a great business, a secular business. You will see compounding of earnings. A lot of those positives have been captured in the stock price and still trades at a very rich PE multiple. So maybe if it corrects another 15-20% or so, and if you've already 3 to 5 year type of horizon, then you could look at Dr. Lal's pad. But for the time being, I think the market doesn't like these very high PE growth stocks, and maybe you should respect that.
We should pull up the intraday chart of KIMS, Krishna Medical. That stock has moved to the high point of the day. We had the management earlier today, and they were sounding rather optimistic in terms of business, in terms of margins, as well as in terms of the average revenue per bed as well. They're expecting it to, hover around 24,000, 24,500 odd. So optimistic sounding management. The stock is currently moving to the high point of the day as we speak. Dipan, you hang on with us. For the time being, we'll slip into a short break. As we do that, here's something that you, our viewers, must take note of. CNBC TV18 and the National Stock Exchange have come together to promote investor awareness through a very special campaign, Informed Investor, and that empowers you to make the right decisions with your money. Smart investors, well, they make a habit of settling their accounts periodically. They do not keep idle funds and securities lying with their broker. Well, the idea behind this is to create a firewall to prevent misuse of your funds. Also, deposits kept idle without any trading activity for more than 1 year will be treated as loan, and no investor protection measure is available against them. Welcome back. Well, few stocks moving to the low point of the day. Tata Power is one such stock. The stock, remember, had a big rally in the last 24 months or so, moving from around 30-40 rupees to around 250 rupees. In the recent peak, it's corrected a goodish bit. Dipan, any view on these power names, particularly Tata Power?
I think stock has moved up, and a lot of the positive which they have got as far as their renewable business is concerned may have got priced in. One is to understand that Tata Power is a rather complicated company. So it's got power generation, distribution, it's got mines in Indonesia, an EPC business for solar cells, as well as manufacturing of solar module, and then also has its own renewable power plant. So it has many moving parts over there, which make it difficult to value, and from time to time we have volatility in their earnings as well. Like, for example, this quarter it did well because of profits from its Indonesian coal mines. So given this sort of complexities, I would like to avoid Tata Power and mostly some of the other power utility companies as well. And underlying growth does not justify these kind of valuations for these companies. If you still want to buy a power utility, then go for the largest, that's NTPC, where if they're able to get more and more revenues from the renewable side, then certainly it would get a higher rating as far as ESG is concerned, and maybe P multiples also can move up. In the meantime, there is comfort in valuation and good dividend yield.
Okay, fair enough. Well, Dipan, we'll thank you on that note today. Thanks a lot for joining us, and have a good weekend. Mitesh, I wanted one last thought from you on the Bank Nifty, because it looked like that was going to outperform, and that did for a fair bit of time. but now it's also down about 1.5%. Your thoughts on what next?
I'm just breaking down. I think this 38, 550, 600 zone was important for the bank Nifty to hold. A lot of intraday averages were converging there. So I think today's close, if it remains below 38, 500, I think we might carry some STBT sell positions for tomorrow as well. I think of course there's always a chance of a gap up opening, but the setup is clearly negative, and unless until now we start getting past 38, 700, I think a short trade can be taken here. So long on put options or selling call options, what I would advise.
Okay, well, let's now do one thing. We will, Mitesh, thanks a lot. Have a good weekend. We'll talk to you Monday now. We'll start wrapping up the market action for the day, and the market is closing, well, fairly close to the low point of the day. This is not a good close for the market, especially on the bank Nifty. On the Nifty as well, just slightly above the lowest point of the day, but well below some of the crucial levels. So 17,240 perhaps becomes important once again. Now, in terms of individual stocks, a lot of big stocks are closing at the lowest point of the day, starting with Tata Motors. TCS is closing at the lowest point of the day. Tech Mahindra is closing at the lowest point of the day. Bharti is closing at the lowest point of the day. ICICI Bank, Kotak Mahindra Bank, HDFC. These are few stocks closing at absolute low point of the day. Infosys was the top drag on the index. That's also, by the way, close to low point of the day. Grasim was the top loser, down about 3.5%. What else? SBI, Powergrid, Wipro, Kotak we already mentioned, Ultratech Cement, Titan, HDFC Life, Bajaj Finance, even Larsen & Toubro, which is erstwhile a strong stock, was down about 2%. Cipla, Nestle, Asian Paints, Axis Bank, all of them were down. On the upside, not too many, very small list. IOC was up 1.5%. IndusInd Bank was up about 1%, but that's about it actually, not too many gains. So a very poor close is what I would say, Nigel, as far as the large caps are concerned.
Well, that's right, and there was pain actually in the broader markets as well. Anuj, plenty of stocks actually were losing out in today's trading session, and that's why you had the index that was down close to around 2%. InfoEdge, that one came in for selling, was down close to around 6%. India Cements on expected lines was a weak set of numbers, but the market really sold off that stock. Remember, from the highs, it's corrected nearly around 17-18% odd. Chambal Fertilizers, these are all frontline names. Remember, that one as well lost close to 5% of its market capitalization. And mid-cap IT, well, it ran ahead of itself. It seems that's the verdict, at least as of now. So L&T Infotech, that one did see some selling. Persistent Systems as well was under some pressure. And Firstsource as well as L&T Tech Services, all of them were under some pressure. AU Small Finance, it's had a good run this year. It's up close to around 27% approximately. So various brokerages, well, they're quite positive on the stock even from year on. But from the highs of today, well, the stock did correct close to around 6% or thereabouts. Motherson Sumi, in reaction to its numbers as well, did end in the red with a cut of close to around 4%. A few gainers, well, an unlikely hero of the last couple of trading sessions, Oro Pharma, up close to around 2% in trade today. Petronet LNG, that one was up close to around 2% on. And if you still go, into the broader markets, well, there were a few stocks. HCC was up 15% or thereabouts. So that stock did spike up. Specialty restaurants, well, that stock was up close to around 6.5%. JSW Energy, well, after a bit of a correction, that one as well was back on the buy list. Was up around 5%. Second day running, Axis Gates, small company. Numbers came out earlier this week. From there, the stock has been on upper circuit. Remember, from the recent peak, it's seen a big correction, but up close to around 5% yet again. But that's what brings us to the end of this trading session, as well as this week. Wishing all of you a good weekend ahead. We'll be back on Monday with a lot of market action. But for the time being, we'll wrap up on closing bell. Up next, though, how should one approach the mid-cap tech stocks post the recent fall? Well, our experts of, expert panel is lined up in our special offering, Smart Money. Stay with us.